Yeah, that wasn't what I was hoping for, how that worked last time. That's not what I wanted to happen. So if you guys are back, yeah, yeah, that was how do people do it? Where they go, all right. So we are back now. I just our live stream is back. We on back. All right, cool. Looks like we're off there now. Good. All right. Man, that's... All right, so we trying to get back on this thing. I guess I got to delete this right here off of YouTube. That was a cluster. That was a cluster fark, if you know what I'm saying. So we're going to edit this video and turn it off. I think I can do that. And then we'll jump on this because I want to go over some things for sure. That was not what I was hoping to have happen. I was hoping I could have the Zoom because I like Zoom, but what I it didn't work the way I anticipated. Let's just put it that way. So let's turn this off, make it private. We'll delete all that, and then we'll go on our way. And then we'll go onto this live stream that we're doing now. That was a cluster fark. All right, so that didn't work the way I was hoping, and I'm sure there's an easy solution to that. I don't know what it is. So what happens with Zoom? Zoom, you got your private. Yeah, I'm back, Rich. Yeah. Woo, that wasn't what I was hoping to happen. Zoom, you have your kind of private engagement with people, which I like a lot. It's fantastic. I love it. When I do right now, I'm connected on Zoom and I'm live on YouTube. But the problem with being live on YouTube and connecting to Zoom is that you can see the other people potentially in the chat. You can see there if they forget to turn the camera off and stuff like that. And that's not what I'm shooting for right there. I'm not shooting for that at all because I don't want your information to be public if people don't want it to be public. Ooh, so that was not what I wanted. So there's got to be a way. Yeah, I don't know. That's interesting. All right, so looks like people are starting to get off of this one now. Come back on here. Where I'm going with this has got to be a way to make it so I can connect it to Zoom. Have you guys? What I'm trying to do is YouTube used to have a live stream where you could have a link. It's literally that. It was freaking awesome. Said, here's my link to my live stream. Click on this because people don't get notified anymore. And it would have been sweet to be able to provide a link to say, here, click on the live stream that I'm doing now. But because YouTube they don't notify people. And they used to be able to do that until they went into this about a year and a half ago. They started doing this other stuff with YouTube where they got rid of their creator studio and they got rid of their Google Hangouts thing. And you can't do that anymore. It's stupid because the link is fantastic. So you provide this link. You say, okay, click on this and you can email it. And like I did this today, you can't do that. At least I'm aware of. And so what I do now is I sent that Zoom thing as a link so people could jump on and which was sweet. Yep. Come on, big man. Good boy. So I provide that link via Zoom, but I didn't want everybody logging in so we could see you because I mean I got no qualm with that, but yeah, I don't know. That's the challenge. There's just challenges there, and I got to figure that out. So until we figure that out, we'll probably do Zoom only live streams on occasion. And I think, and then not put them on YouTube right out the gate. That's what I think I'll do. So I'll email everybody. I'm going Zoom only live stream. I tell you though, the problem is that if people can see other people's screens, not screens, but their visuals, some people don't mind it. Other people do, and they might not know their camera is on, if that makes sense. And I don't know what to do there. So do Zoom only. The issue is YouTube is becoming more censorious, if that makes sense. And I do have a paid Zoom account, Theo. So you say I have the ability to turn everyone's video audio off? Oh, sweet. All right. Okay. I did not know that. Really? So I can turn everybody's off? Oh, that's fantastic. because I do have a paid. That's why I like it, man. I like Zoom because it's works for me, man. Other than the commies, obviously Chinese commies are looking at what we're doing, but I might have to try that next time. The next subscriber only live stream we do, I'm going to try that to see if I can't figure that out. Hey, Marie, that would be good. No, don't growl at me, Growly. No, sir. So that'd be sweet. So if there's a way to do that, Theo, the next live stream we do on Wednesday night, I'll just mess around and see if I can't figure that out. That's good. I knew there's a way to do that. I just don't know how. But we'll figure it out. That's good. I might have jumped the shark a little bit today trying to get this email out there to see if I could make it all work. But if there's a way to turn everybody off, that's fantastic. Yeah, Marie, Zoom, it's not as, man, the thing with YouTube, the old days of YouTube with their old live stream stuff it was Google Hangouts. It was awesome. I mean, it was fantastic. And then I don't know why they got rid of it. They now have something called Google Meetup or something like that. Right on, Dreana. I'm glad you're back. All right, sweet. So you're back. Good. I hope, we didn't, tick off a lot of people. So I just, whatever. It just is an experiment. It didn't work like I was hoping for, but I appreciate that, the sentiment. Anyway, the old Google Hangouts was awesome. You said, this is when I want to go live. You created this live stream, a meeting event. Literally it's just a URL. You could email it to everybody. It was freaking fantastic. Loved it. And it worked like a charm. And then they got rid of that for some reason. All right, so let's do a couple things here because I like live streams, actually. I enjoy them, to be perfectly honest. You wonder why I'm doing more and more live streams. Well, it's a couple things. Is A, I enjoy it. B, I get live interaction. C, Google seems to appreciate live streams. I definitely see more traction when I do live streams than I do when I don't, in terms of my audience growth, which is cool. And then finally, what was I going to say? It's a way to get when it comes to finish up my Wellington book. I'm like, it's anytime you finalize it and you have to read back, you're like, oh, you don't want to. The editing is always like, oh, that's anytime you write a book, the beginning part is fun, then you get in the grind, then you finally figure it out, you're like, all right, good, and then you got to edit it, you're like, oh. But yeah, 50 over. I mean, getting 50 in a live stream on COVID and the economy, I could do that on Zoom easily. But I don't say it like I'm being cocky. I'm just saying. But the issue is my YouTube channel is significantly bigger than my email list or my subscribe star list. So if I want more than 50 people, it's actually 100. Hey, Deb. If I want more than 100 people, I don't know how to do that, because on a webinar you can have 100 attendees, but you can have 10,000 people who just log in, if that makes sense. And that's what I was trying to do. I didn't want to do a webinar where I was getting attendees. I just want where they're called participants. I just want people who can log in. So my man Theo in Texas says you can turn off everybody, which is what I'll try next time on Wednesday night. Just real quick, for those who don't wear, if you do want to support me, I'm going to show with you real quick. You can go to let me just share with you real quick. Hold on just a second. There we go. Hold on. Subscribe star. There we go. And you type in. Oops. Subscribe star. All right. So if you let me share my screen. For those who want to, on every 2 weeks with Subscribe Star, people who pay me, I think it's $10 a month. They pay $10 a month. I do live streams solely for my Subscribe Star membership. And you go to subscribestar.com and just / Josh Scanlon, you can sign up. And then, and what that does is I'm trying to get more people on Subscribe Star so I can use this is the more freedom-oriented version of Patreon, if that makes sense, because it's more of a community. With YouTube live stream, you don't know who's logging in, and basically, if I'm the only guy on here, I don't know what kind of clowns are. I don't know what kind of clowns are, monitoring or saying stuff and stuff like that and being stupid. So I don't know like what the what the people posting stuff was. There was a guy the other day who was just posting stupid stuff, quacky duck guy or something. It's just like, I thought he was being, silly at first. And I realized he was being a fool. And it's just like, I mean, it's kind of a pain, if that makes sense. So with Subscribe Star, because you get who it is, obviously they're paying, $10 a month. But then you have more of a limited audience, which I enjoy a lot. And I like the YouTube audience too. Don't get me wrong. I like both. It's just with YouTube, you don't have as much control. And on top of that, YouTube is engaging more censorious behavior, which is kind of frightening, actually, especially when it comes to stuff like what we're going to talk about here right now, which is, I turned it off, Kim. Kim said Zoom didn't work for me. I turned it off just because I didn't have it set up the way I was wanting to. So I appreciate the test run for sure. To be determined what we want to do going forward in that regard. But I think I might have I think I have what I want to accomplish with that for sure. So, all right, I want to do. We'll move forward. Let's move forward here. Hopefully, y'all can hear me. You can hear me. Just give me a thumbs up. I think you can hear me. Yeah. All right. Let's see. All right. Because Pablo just. I was just was just yapping. So I'll make sure that the audio is good here. It looks like I got thumbs up there. All right, cool. All right, sweet. So it looks like I'm. All right, cool. All right, so let's. I want to do it. I got a lot to go over here today. This is right on. All right, sweet. And again, sorry about the issue with the Zoom thing. It's a learning experience. CB Michigan, right on, man, right on. All right, so what we're gonna do, that took me off my game a little bit, because I was like, dude, why is I see everybody's face when I'm not sure they want to be seen? And so we deleted all that. So if you were on the last live stream that I just did a few minutes ago, it's gone. I shut that sucker down because as a Charlie Foxtrot. All right. So what we get is Harry Chu, who's always telling us we should speak Mandarin. Right on, Harry. All right, so I want to start with, we're going to go over a couple of things. I want to start with booming Zoom towns, which is pretty interesting to me. I want to share this article with you from a guy named Connor Sen. Don't know who old Connor is, but I thought this was pretty interesting. So we're going to look at old Connor Sen. This is actually pretty interesting. Housing in a certain type of town could not be hotter. And some of them have been getting attention way out of proportion to their importance in the country or the economy. And the reason is they're the places where corporate execs, Wall Street barons, Hollywood stars, and more than a few journalists have fled to escape the perceived dangers of crowded cities filled with people who might be carrying the commie virus. Now, I find it funny. There's more to than just a commie virus. It's the freaking Antifa mobs too, but they never want to say that because they don't want to be canceled. And as well-paid knowledge workers who can do their jobs anywhere now flock to these Zoom towns. Get it? Boom towns, Zoom towns. Home prices are surging and the housing inventory is dwindling. Normally, high prices and low inventory would lead to a construction boom, but many of these communities tightly regulate new building. All right, it's hardly a surprise that home prices are up 25% from a year ago in the Hamptons, given its proximity to New York City. Out west, mountain towns are seeing their real estate gobbled up too. Truckee, California, which is near Lake Tahoe, seeing a boom. Prices are up 50% from their lows in the spring. Missoula, Montana, which is home to the University of Montana, which gets 4 million out-of-state visitors annually, is booming. Bend, Oregon is booming. The appeal of the beach or mountain towns with well-built cultural amenities, I bet Asheville, North Carolina is obvious, which is why they're historically drawn tourists and college students. But a limiting factor for economic development and home prices has always been there weren't that many high-paying jobs available. Virtual work changes all that. But if virtual work holds the promise of a new wave of migration, the way air conditioning allowed the Sun Belt to boom, a significant constraint is going to be how these communities are willing or even able to grow. Atlanta, Dallas, and Houston have metro areas now about 5 million each because of pretty liberal building codes. Truckee, Missoula, and Bend have populations of less than 100,000 and lack the infrastructure or perhaps the desire to grow to be major areas. The way this will probably play out is home prices in these communities will soar during the next 12 to 24 months as pandemic buyers bid whatever is dwindling, a bid for whatever dwindling housing inventory remains. Think of it as surge pricing in the same way that New Year's Eve revelers pay a premium for a ride on Uber or Lyft. But inevitably, higher prices choke off demand. Not necessarily if we lead to more supply. Is there going to be more supply in towns like Missoula, Rapid City, Asheville, North Carolina, wherever Truckee is? I don't know. Bend, Oregon. I don't know. I frankly, I bet not. I bet not. Even my little town of Milton, Georgia, even all these suburban people here are saying, keep Milton rural. They all have bought into the town of Milton, and now they want to shut the door behind them, which is what always the more privileged elite do. That's what they do. They buy their little neck of it happened in freaking Maine all the time, man. They buy their they buy their property of heaven, and then they shut it from other people. They don't want those type of people coming in. This shift in housing demand to vacation communities should be welcome news for those who remain in large, high-cost cities. Already, apartment rents are plunging in Seattle, San Francisco, New York. Combine that with modest increases in the supply in single-family homes in Boston, New York, and San Francisco, and home prices in these communities could start to decline. We've already seen the cities such as Portland, Denver, Nashville, and Austin benefit from knowledge jobs being pushed out of the costly coastal hubs. And now it seems likely to be a new group of winners such as Truckee and Missoula. I could not agree with that more, actually. I think that's interesting. The Zoom boom towns. I think that 100% makes sense. And I would suspect that for people who are looking for cheap buys out in the country, I think you're going to have a hard time. I listened to my man, Curtis Stone. I was just listening to today, as a matter of fact, the urban gardener, who I talk a lot about on this channel. And there he is right there. The urban farmer, talk about what he's planting in the fall. Now he's in Canada, but he's saying, dude, the prices are through the roof for property in the countryside. He's looking, and he says it's nuts. It's not easy to find. And I completely agree with that. So that means, if you find an opportunity, I'm telling you right now, at the end of the day, there's going to be massive, probably 5 to 10 years of supply for vacation homes, which could be your primary home in 5 to 10 years, as the older baby boomers who have fled their cities and moved to these places of their second homes because they got all the wealth, but they're going to have to relocate back because they're, look at my man Scott just left LJ, Georgia, which is right up north. That's where the old Sun Trust executives used to have their mountain homes. I forgot the name of the community up there. I've drawn a blank. But anyway, LJ, it's in Gilmer County, and that's I just can't remember the name of it. But there's nothing up there. I mean, it's just, if you're looking to go in a more amenities with hospitals and all that, you can't be up there. And so people are going to sell their houses like crazy, which has already happened. I had a bunch of clients up there. They couldn't sell their houses to save their life. It was crazy. And this is, 4 or 5 years ago, because there's no demand. That's probably going to change. But when there's no demand and you get a bunch of supply in the market, drops the price. I'm telling you, be on the lookout, man. If you're trying to get out of town, probably not yet, pull the trigger. I bet in 5 years, I bet you'll be able to find, I can't remember the name of that freaking vacation places up there. It's a resort community. It's a boat, some kind of boat thing. I forgot. But anyway, it's Lake Canoe. I think it's Lake Canoe, something to do with a canoe. Anyway, they what's happening is they got all these older people now, older 70 years old, young 80s, and they're getting out of Dodge. Their wife died. In this case, his wife died. Can't sell the property, trying to move closer to kids or more closer in town. I'm telling you, you're gonna be finding cheap stuff, but it won't be the next couple of years. All right, so let's go into something else I want to talk about. We're gonna go into, and this will probably get me banned from YouTube. We're just going to go into the COVID tracker from Brian Westbury and the boys at First Trust. Every week they do this. And what you'll see here is the First Trust COVID-19 tracker, daily reported new positive comedy test versus daily reported deaths. And here's a daily reported test, a positive test. You can see it's a significant drop from July 15th to August 5th. And this is And here's a death. We had a little bit of a creep up here, and then we've had a falling back. So leveling off right now. It's a 7-day moving average, by the way. And I mean, so this is a 7-day moving average. This is the day. You can see the day is just dropping off a cliff here. 7-day moving average has come up a little bit, but certainly not anywhere near the peak when Cuomo was killing people. So you can see it's dropping off, it's leveled and dropping off. The number of actual positive cases is dropping like a brick in water for sure. I was just reading today that North Carolina is still going to have safer at home. The friggin' is nuts. It's not based on any science whatsoever. Deaths by age versus share of the population, the U.S. All right, so 85 years and older, they're 2% of the population, and they account for a third of all deaths because of coronavirus. Again, you take away the insanity of the what people have done. Governors are forcing older people with COVID into nursing homes. That would be significantly less, and those guys should never be able to walk away from that insane. But we've got 32, 26, and 21. If I take my trusty calculator, I add 32 plus 26 plus 21. I realize, 32 plus 26 plus 21. I realize 80% of the deaths of a coronavirus, if even want to believe all these numbers, which I don't believe it at all, but 80% of the deaths are for people over 65 years old. And then you add people 55 to 64, that's another 12. So that's 95% roughly of coronavirus deaths are people over 55. So the idea we can't open schools, we got to protect the kids, it's just freaking nuts, man. And again, the numbers are we know for a fact these numbers are overplayed because they told us that. Positive COVID-19 test by age group for commercial and public testing. That's complex. I can't see. Here's what they want for preclinical vaccinations, this isn't scary that they're going to quickly come up with a vaccine and we're all just gonna have to take it. If you want to go someplace, you're gonna have to take this vaccine. 135 vaccines, not yet. This is what they do for the vaccine scheduling. 135 vaccines, not yet in human trials. 18 testing safety and dosage. 12 expanded safety trials. 6 vaccines and large scale tests, and 1 vaccine approved for limited use. Yeah, I'm not putting that in my body. Total deaths by age group. Again, we talked about from February 1st to August 1st, we had 484,000 people die in the U.S. who are over the age of 85, of which 45,000. Come on, big man, don't growl at me though. Of which 45,000 were from COVID-19. And again, you take away some of the insanity of the governors, and you take away the fake numbers, and that would be even less. We had 385,000 people die who were over 75 and under 85. 37,000 of them were a result of COVID, and you can just see the disproportion of the deaths of the overall world of America relative to COVID-19. In the 10 weeks following the declaration of the pandemic, emergency departments visited by 23% for heart attacks, which freaking infuriates me because heart attacks, heart disease, heart issues, all that stuff is the number 1 cause of death in the United States. 20% reduction for stroke, and a 10% reduction in emergency department visits because hypoglycemic crisis. I don't even know what that means, but number of states with increasing COVID-19 tests, number of states, as you can see here, this is a number, you got 50 states. We'll probably have 51 because I'm sure when the Democrats take control, DC will become a state. But anyway, you can see we got, 7 states have increasing COVID numbers, and 52 don't have increasing COVID numbers. Daily reported new COVID-19 tests. Did we already do that one? Yeah, so you can see the daily, let's see. Oh, here we go. Daily reported new COVID-19 tests versus daily reported deaths in selected states. Texas, Arizona, California, and Florida. I don't understand why they don't put Georgia in there, because Brian Kemp is the success story that has been undervalued. Never mind Kristi Noem up in South Dakota, because he was the one who was taking the beating down at first, and he stood his ground. Good on you, Brian. Freaking love that dude. Still pissed me off when he started, getting a little bit squishy, but it seems like he's got his spine back. But as you can see, daily new positives and these 4 tests, these 4 states, Texas, Arizona, California, and Florida, way down. Daily deaths are up because we had initial test outbreak, and now that's leveled off. Literally, it's just there's nothing there to say, oh my goodness, we're all gonna die. I thought that was pretty interesting. So we'll get rid of that. And then what we're going to do is I want to go into this. I want to share with you guys the number one thing I wanted to talk about. Yeah, I'm not taking that vaccine either, Drayon. I'll tell you that right now. They are setting up to make vaccine mandatory for. I told you, Harry. That's exactly what they're going to do. They're going to make the vaccine. Ray says Connor is an investment guy at New River Investments out of Atlanta. He's a contributor to the Atlantic and Bloomberg. Yeah, that article was out of Bloomberg that we just snaked from advisor perspective. Carl says Asheville's gotten crazy expenses and a liberal pit, but you go to Hendersonville, right? That's right down there. I work in Texas, relatively close to COVID-19 testing. There are nearly no lines for testing. Well, nowadays, if you get tested, they want to put an ankle bracelet on you like they did with that Indiana. It's crazy. All right. So again, I appreciate y'all being here. I tried some finagling. Is that what I'm looking for? Where I could get my Zoom connected with YouTube, and then it went about my ability to control. And then my man Theo said, dude, you can mute and make people's audio and visual not come. So next time I'm going to try that, because if I can get that to work, that's going to be sweet. So I can send everybody links. I love live streaming. Love it. All right. So now let's go into this. This is where I want to go here, my friends. I love this stuff right here, what we're going to do. Yeah, right on. R. Dwayne, Georgia Tech alum. He voted for, that was when Georgia Tech was easy to get into until my daughter went. Now it's tough to get into. Just joking you. He said he voted for Kemp. Again, he was not a big fan, but he's doing well. Me too. I completely agree. No, this is a bark-free zone, dog man. Oh, thanks, Drayon. That was nice. How long are people waiting for tests in our area in California? Is over 7 days. I don't know. And my man said in Texas, it's just not. It's not. I'm going to do a video later on today to say coincidence. It's going to be titled coincidence. Hey, what's up, babe? Is that you or Maddie? I saw some of the background. All right. Anyway, so I saw some of the background over my shoulder there. I couldn't tell if it was my wife or my daughter. But anyways, so I'm going to post a thing called coincidence. That'll be interesting. Why are we? Anyway, check that out. It's gonna be fun. It'll be fun to talk about. All right, so let's go into what I want to talk about today. I wanted to talk about share. This is going to be awesome. Right on, Sean. All right, so hey Dan. Speaking of which, my friends, my brother was up in Maine the other day. Just let me share this story with you real quick. Then let me show you what I want to talk about first. We're going to go into this guide of the markets. This JP Morgan stuff is awesome. Look, I'm not a big fan of JP Morgan. To their benefit, they called the GDP numbers correct. Most people are calling about 20 to 25% decline in annualized GDP. JP Morgan called about 35%. And when I first heard that, I said, dude, why are you being so negative, Nellies? And it turns out they're right. They were right. So they called it right. Now, I mean, a stop clock thing, I don't know, but they were right there. So cool on them. We're going to talk about this. There's so much information in their guide to the markets. I love it. And I'll probably do this once a quarter because I do update them every quarter, which I love. All right. So real quick, I want to share a story about my brother. He was up in Maine with his 4 kids and his wife. They live in Richmond. You know, my brother's from Maine, as my sister Abby, who you all saw when I interviewed Abby about a month or so ago, who lives in New Jersey. So we're East Coast through and through. My brother married a lady from West Virginia. Actually, she wasn't from West Virginia. Her parents were. They were in Westchester, PA, if memory serves. But he met her at William and Mary. So basically, Mid-Atlantic, Southern is kind of where we've all migrated to. But he was up in Maine. He went to Acadia/Bar Harbor. He said, "You don't understand. These tourists up here are just, they got a freaking pole so far up their butts. They're just all angry. They're all New York, Boston. They're just up there angry. They don't want to wait in line. How dare you take off your mask to sneeze? How dare you have children? How dare you this?" They're all freaking got a stick up their butts. They're all angry tourists. He goes, the funny thing is, though, you go somewhat off the beaten path, the Maine people are freaking awesome. It's just the tourists up there. And I said, man, ain't that the truth? And he says, so basically, if you go to like Booth Bay Harbor, it's fine. Most of the people there are just fine. But if you go to Bar Harbor, it's just rich elitists from New York and Boston who think everything revolves around them. But he said, they went out sailing with someone who's very near and dear to our family's heart. They said they had a blast of a time, because I tell you, the funny thing is I never realized that the tourists that come up to Maine are the problems. It's not the Mainers at all. It's the tourists that come up there, because they're just, but not all of them. But it's just, the rich people from Boston, New York City, and in the areas that are the most populated. And he said it's completely is a downer, man. But he said, you get away from those people, it's awesome. And then he said there's Trump signs everywhere up there. He goes, I was stunned. He goes, I was stunned how many Trump signs there are. He goes, it made me have my brother, we're Catholics are naturally pessimistic people, Catholic guilt, Catholic pessimism and stuff. And I'm not even sure he's a Catholic anymore. I don't know if he is. Maybe I'm not sure. But anyway, either way, we were raised Catholic. He goes, it made me feel like there's still hope yet, he goes, there's so many Trump things out there. It's crazy. And that's in Maine. And I said, and he goes, look, he hadn't been there for 13 years. And he fell in love with Maine too. It's just kind of funny. He goes, get away from the tourist areas, the real Bar Harbor, essentially, Acadia National Park. The rest of the state is freaking awesome. People are awesome. Even the tourists are awesome. People are just regular people, man. And I got a kick out of that, because I have a sneaky suspicion if you go to Maine and Bar Harbor and you come back, say, man, people out there rude. You're not talking about Mainers. You're talking about New Yorkers and Bostonians for sure. So I just want to share that story with you. All right, so let's go to, we're going to share my screen. I want to go to some of this guide of the market stuff, because there's so much stuff in here. And I'm going to look over here real quick. Yeah, Dan says he likes New Hampshire, Maine. I tell you, man, my brother said, like the funny thing is when we moved from Maine, Dan, I never thought ever go back. And then my brother thought this, he hadn't been there 13 years, but it's just like one of those things, like it's like its own separate world of peace and serenity. I imagine that's how some people feel about the West Coast, not, California, but they go to Coeur d'Alene or something like that, or, someplace like that. I imagine it's the same thing. It's just like, feels good. Like when you get out of the city, you just get into a mountain, Blue Ridge, Georgia. It's just like, when I went up there to interview my man, Fritz Gilbert, up there, it just was like, it's just relaxing. You know what I'm saying? It just feels good. Feels good. All right. Let's see what we got. Yeah. So I was reading too, my man Young Ripa from Texas did a video today. He said Mike DeWine tested positive for COVID-19 2 days ago, and yesterday he tested negative. So my man Warren says tests work, but have margin of errors. The rate of error depends on which test. Poor Alyssa Milano tested negative twice, but found out she had antibodies, recovered after she. So who knows, man? Poor Alyssa Milano. Yeah, Alyssa Milano. Sean, you're Rangeley, Maine, but you're in Austin right now. All right. Yeah, Rangeley. That's up by Freiburg on the western part, if I'm not mistaken. Poor kids will do what they do without sports. So horrible, can't play with mass. I'm not saying the future is stolen. I'm saying it could be stolen if we let this crap continue on. That's for sure. Sean is exactly right about testing lines in Texas. Issue is that doctors are sending people to testing sites that have lots of sick people. Yeah, great. Yeah, right on. There you go, Harry. So you must have watched my man Young Ripa. All right. So let's go over this thing. This right here is fantastic. I love this thing. And what I want to show you, I'm going to make it bigger. And Ray, my man from SMU, much obliged to what you did there on your thing that you know what I'm talking about. So I appreciate you doing that. So I did not have to, by the way. All right. So we got S&P 500 index at inflection points. All right. So I just want to point a couple of things out. All right. So right here is the PE ratio, 27.2 as of March 24th, 2000. That's a forward PE ratio as of March 24th, 2000. All right. So that's high, right? All right. So we got October 9th, 2007, when the beginning of the decline, October 9th is 15.7. Interesting. February 19th, 2020, the forward PE ratio is 19. Interesting. June, this is before the collapse, but June 30th, 2020, the PE ratio of the S&P 500 on forward earnings projections was 21.7. Isn't that pretty interesting? So we have much lower PE ratio than we had in right here, which is October. I mean, when the tech bubble burst. We have much higher PE ratio than we did in October 2007. So it wasn't an earnings-based economy decline. It was basically the fault of the mark-to-market accounting for sure. And we have, just a little bit higher, 10% higher or so than we had in February of 2020, but not a significant increase in PE ratios. Anyway, nothing of that right there jumps out at me like, oh my gosh. Watch the difference though. PE ratio 21, we'll just say 22, with a 10-year treasury at 0.7%. PE ratio at 27 with a 10-year treasury at 6.2. 20 ratio at 27, 10-year at 6.2. All these people, their moms screaming bloody murder about the second wave or not of the, oops, it looks like I'm unstable. Hold on a second. Yep. So what is more likely to have a decline, because the PE ratios or because of treasuries? So a PE ratio of 21 with a treasury yield of less than 1 isn't extraordinarily expensive on the stocks. It just is not. And don't forget, a PE ratio of 15 back in October 2007 with a 10-year treasury of 4.7. I hope you get where I'm getting with this here. You cannot sit there and say we're inherently pricey because of the price to earnings ratios when in fact the 10-year treasury, which is the alternative, is so low, and real estate, which is a second alternative, is so high, if that makes sense. And the reason the alternative, the 10-year treasury is so low is because the price is so high. All right, keep going with me now. Forward PE ratio as of June 30th is 21.7. Again, we're going to say 22. The 25-year average is 16.2 or 16.4. So we're significantly higher than the 25-year average. All right. But we go back to the 10-year treasury, 0.7. 10-year treasury average is probably 4% or so. Shiller's cyclically adjusted PE ratio, this is what a lot of people use to say how high the valuations are on stocks, is about 29 right now. 25-year average is 27. So a lot of people say, oh my goodness, the Shiller, the CAPE ratio is too high. And I always point back to CAPE ratio does not take into consideration the 10-year treasury. It just does not. It just looks at the valuations of stocks without looking at competitive investment opportunities in essentially real estate and bonds. Dividend yield now is 1.93, which is just a tad below the 25-year average. Price to book is 3.32, which is just a tad above the typical price to book, which all that is not, it's just not nosebleeder valuations. It's not. Price to cash flow is quite a bit higher. And I think you could throw some of that for the tech stuff for sure. That's 40% price to cash flow higher. But the other valuations, what I look at is PE, price to book, and dividend yield. Those are not significantly higher than the 25-year average. This is right here. It's pretty interesting. Forward PE ratio and subsequent 1-year returns. All right. So we have PE ratio right here, 22. And if we look at how many years is this? This goes back to 1995. So that's basically 25 years of time frames. We say if we have a PE ratio that's on this side, can you see what I'm doing there? Hold on a second. Hold on just a second. Yeah, you can see my cursor. So we have a PE ratio that's on this side of the equation here. We'd have a forward return, subsequent returns of basically just a tad above 1, of 0, not much. 5-year subsequent PE ratio. So if you have a PE ratio on this side here, which is 22, you're going to essentially get no returns for the next 5 years, if that makes sense. So we have 25-year time frame. If we have a PE ratio of right here, basically 22 where we're at, there you go, buddy. Subsequent 5-year returns are basically nothing. All right. So a lot of people are, oh my goodness. Let's keep going down. Here's something I find is interesting too. S&P 500 2020 earnings growth estimates. You'll see energy right here is down, earnings growth by 100% decline in earnings growth estimates as of June 30th. But literally just 6 months ago, they expected to have a 20% increase in earnings growth estimates. Estimates on consumer discretionary down 57%, whereas 6 months goes up 12%. You see what I'm saying? So we can see the significant reduction in earnings growth estimates on some areas of the economy: energy, industrials, consumer discretionary, financials, S&P 500 as a whole. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So we have a 22% decline in year-over-year earnings estimates at the end of June, whereas at the beginning of the year, we had a 10% expectation for increase. So you can see now they're thinking utilities will have a 5% earnings growth. 1% earnings growth. Tech will have 1% earnings growth. Everything else is negative. We'll see. But I thought that was interesting how quick things can change. The reason I point this out is because a lot of people say, look, our analysis are XYZ for going forward. Come here. Come here. Oh, yeah. There he is. Our analysis are XYZ going forward. Man, no one predicted this COVID-19 stuff. No one did. No one did. And so it's all speculative, man. It's just all. Let's take a look here. This is what I like here too. S&P 500 year-over-year operating earnings per share. Where does it come from? The bulk of your EPS growth comes from profit margins. Profit margins. So in the first quarter 2020, we were down 49% earnings per share. 47% of that was because of profit margins. All right. I mean, you can look here, 2010. The earnings per share was up 47%. The bulk again was up because of profit margins. Earnings growth year over year, i.e. profitability, always drives future valuations. It's all that is to it. I cannot stress this enough. It has nothing to do with issuing more shares, has nothing to do with revenue, has all to do with earnings growth year over year. And if we get, it does have to do with revenue, but if we get profit margins that are lower and lower because of mandating $15 wages, minimum wages, mandating everyone wear masks and social distance, and just mandating. The more you mandate, the less profit margins there are, thus the less the stocks can grow. So because profit margins are what drives growth for sure. Let's keep going down here. This is interesting. Dividend cuts, suspensions, and increases. I was surprised by this, my friends. This is crazy. So we'll see increasing. This is as of June 30th too, by the way. So Guide to the Markets data as of June 30th. Look at all these companies increasing. This is increasing dividends. Look at that. In materials, 21% of companies are increasing dividends. Only 7% are cutting or suspending. Consumer services, 27% are increasing. 9% are suspending. The consumer discretionary, 47% are cutting or suspending. The vast majority are suspending, but still 31% are increasing. Now we go down to real estate. 56% are increasing dividends. Only 13% are suspending or cutting. Utilities, 67.9% are increasing dividends. Only 3.6% are cutting. Energy, 46%. How can that be? In energy, 46% are increasing dividends, where 27% are cutting or suspending. Where's this money coming from? Because the earnings per share of energy is falling off a cliff. Look, where does that come from? I don't know, but that's good news as long as it's not funded by debt. That'd be my concern. Financials, this is where preferred stocks really show awesome. 42% of financials are increasing dividends. Only 1% is cutting. Nuts, man. And cutting doesn't mean stopping. Suspending means stopping, but it means to come back on. Look at that. Tech, 41% are increasing dividends. Only 6% are cutting, suspending. That's good news there. All right, so I'll go here. This is returns and valuation styles. All right, so what I've been banking on for many, many moons is large cap value. Here's large cap value. It was down 16.3% as of June 30th. Large cap growth is up 9.8. I have VTV. VTV is large cap value. And as of June 30th, I have not been able to join the party relative to what growth stocks have. The quarter, I was able to regain 14% of my losses, but the growth was up 27% quarter to date, basically the second quarter. For the year to date, growth is up 10%, values down 16.3 at the end of the second quarter. It's painful, man. And then you got small values down 23%, small growth is only down 3.1. But this is what I found interesting. Since October 2007, large cap value is only returned cumulative 77%, where large cap growth has returned almost 4 times that. See, I'm telling you, man, this is what I'm banking on. Everything reverts to the mean, right? Right. I think somebody say yes, because that's where I'm banking. I'm banking on the fact, or the hypothesis, that large cap growth has already made its gains, and it's going to give back as a leader on the board for the next decade to large cap value. Since market peak of October 2007, large cap growth is only up 77%. That's not even a doubling. Large cap growth, large cap value, large cap growth is up 269%, quadrupling the overall performance of large cap value since that time. Since March 9th of 2009, large cap growth value is up 341%, but large cap growth has doubled that, 653%. It's crazy, man. Just look at value across the board. Value, nothing on the value has doubled the money since October 2007. Small, mid, or large, nothing has. So if you're a true contrarian, I don't know how you look at this and say, we're going on now 13, 14 years of value just being the redhead stepchild. I don't know, as if you're a contrarian, I don't know how you don't load up on value. None of the value stuff has doubled as of June 2020. Growth across the board has doubled, if not tripled, since October 2007. Small, large, and mid. Small, large, and mid all dominate their value counterparts. Look at that growth on the mid cap, 601%, 607%, where growth on the value only 408. Growth on the small up 500%, where growth on the value about 300%. It's crazy, man. So then I like to look, because I like valuations. I don't know how you can be an investor or not at least consider valuations. Current PE versus 21-year average. Even large cap value has a higher PE than its 20-year average, 18.1 versus 13.6. Small value has a significantly higher PE relative to its 20-year average, 27.16. Small growth has no PE because they're not making any money. There's no money profitably. They're not making profits. Historical average for the last 20 years is 30 though. So that right there, small growth, which is up 495% over the last 12 years, has no PE ratio whatsoever. They're not making any money relative to profit margins. Large growth has a 30 PE relative to 18.8 on the historical. It's crazy, man. So we're looking at current value in terms of valuation. So large cap value is 133% versus 20 years overvalued. And I say overvalued, but you can see all that. Large cap growth is only 58% overvalued relative to historical norms, which is lower than small cap value is over historical norms over 20 years. But 20 years is not a big enough sample size. It's very confusing here. I want to go down here. This was probably one of my favorite charts right here ever. Going back to 1980, every single year we have significant market declines. So we got the end of the year return in 1980. The market was up 26%. Look at 1987, which is right here. The market was up 2. All right, but in 1980, while the market actually gave you a 26% gain, at one point it was down 17%. In 1987, while the market gave you a 2% gain, at one point it was down 34%. Let's see here. Right here is a good one. That'd be in 1998. The market was up 27%, but at one time was down 19%. And that's the issue. You just got to hang in there, man. In 2003, the market was up 26%, but I remember this like it was yesterday. The first 3 months, the market was down 15. So if you got out of the market or said, I'm not getting back in until we return to normal, you would have missed that 20% increase because the market was down 14%. I like this one right here. In 2009, The market was down 28% at one point, and yet it added a 23% overall because, again, the first 3 months of 2009 was horrific. And if you missed it, you missed all kinds. And then what happened in 2010, 2010 right here, 2011, we see 16% decline, 19% decline. A lot of people right here were saying, this is a dead cat bounce. Get out. The market's chaotic. I mean, I remember 2011 like it was yesterday. I was driving back to doing a seminar in West Point, me and my man Rich from Louisiana. And I'd never get, I had this general call me on the phone and saying, dude, market's getting crushed. It was back in July and we're down 18, 19, 20% or something like that. I said, I don't know. You run your own money. I don't manage your money. What are you going to do? Are you going to get out or are you going to stay? He goes, I'm getting out. And I don't know if he ever got back in. I think he actually ended up buying some gold. And I said, I wish you wouldn't do that. And of course, he's probably missed all these years. The whole point about this is the market falls every single year. Do not go by, oh my goodness, the market's, it does it every single year, even during the good times. I remember 1998, 1999. I remember that like it was yesterday. The market was kicking butt and taking names, but we had sometimes the Mexican devaluation, the Russian ruble, the LTCM, the Asian tigers getting killed. But yeah, look at that. You still got clocked 34, 20, 31, 27, 20% rates of return, even though you had to deal with -12, -19, -11. It's painful, man. I like this right here. I want to show you. That's pretty good. We got 2008. We had in February, we were down 10%. 2018, we had another 20%. I remember that. The beginning of 2016, yep, we are off 13% at the beginning of 2016. Here's 2015. Here's 2011, which you just got talking about. What I want to show you here, yeah, right here. This is good. All right. We have prolonged instances where the S&P 500 makes no money, the market. They're using S&P. From 1900 to 1926, essentially, you made no money. From let's see, right here, 1933 to 1950, basically 1950, you made no money. If you bought in 1933 and you looked at your investments, 17 years later, same thing. 1966 to 1982, you made no money. 2000, 1999, 2000 to 2010, you made no money. There's lots of, significant time frames where you make no money in the market, which is one of the reasons why you have to have dividend stocks, because if you don't have dividend stocks, it's just price to price. You're literally not making any money, but with dividends, you're getting dividends reinvesting when the price is just inching along, which means you're building up your shares. You're getting dividends paid. Your shares are being re-engaged. I'm telling you, you got to have dividends. You don't have to, but when the markets are flat like this, the dividends can be your sole survivor, man. I'm the sole survivor. I don't know whoever did that song. Is that even a song? I have the, what is that horrible song from Rocky? I have the tiger. I'm the eye of the tiger. Oh, hate that song. Oh, horrible. Anyway, if you had dividends here, you actually made a little bit of money. If you have dividends here, you actually made a little bit of money. All right, let's keep going. The Great Depression had a 26.7% total decline in real GDP. Economy virus, we had a 13% decline in real GDP. Remember, when we talk about a 35% decline in second quarter, that's annualized. That's not a 1/3 decline in GDP in that quarter. It's an annualized amount. So we have a annualized 5% in Q1 and annualized 35% in Q2. We're not having a 40% decline. It was just annualized. So right now, current recession, we're down 12.8%. Look at that. That's the most it's ever been except for the Great Depression. That's freaking nuts, man. So if you're a newbie in investing, welcome, man. You've earned your stripes. This will start shrinking as we go forward because we're not in a recession anymore. All these people, I don't get why these people are saying we're going into a recession, we're going into a depression. That's simply not true. It's not. There is no recession. Could there be a second recession? Sure, but that in of itself, once you break free of the recession, inherently you're not going into a depression. You're just not. It's stupid. It's dumb. Could you? Sure, absolutely. I'm telling you, the way you go to depression is you have wage and price controls. That always leads to high inflation, depressionary things. It's without question. Could we go into a depression without government acting insane? No. I mean, Japan's not in a depression, low inflation, low growth. They're not making much money, but they're not in a depression. It's just they're not even in stagflation. Low inflation, low growth, low interest rates, low unemployment. I still believe that's where we're going to be. It's not depressionary though. And thankfully, as much as, I'll tell you, as much as Trump, I wish he would have took this and not followed. I wish he wasn't a germaphobe. Let's put it this way. He allowed the states to heal thyself, which is great. That's what a federalist is supposed to do. I don't get all these people. I was listening to my man Jack Spirko today talk about Trump's a straw man, a populist, and he's going to control everything, authoritarian. No, he's not at all. He's a federalist, man. He's a populist federalist. So let the states decide. That's what you want. You want the states to decide. If freaking crazy Cuomo up there and half Whitmer up there, they want to act insane and hold their citizens hostage. Sucks to be you. But my man Kemp down here, freaking Abbott, Ducey, and again, I wish Ducey and Abbott did not fall for the suckers. But mandate masks and all this. But hopefully we'll live and learn. DeSantis in Florida, kicking Christie up there in South Dakota, kicking butt, taking name. We got 50 independent, unique states. That's what you want. Federalism works every time it's tried, baby. It's awesome. And I think it's great. I think Trump did exactly what Trump should have done. It's like, let the states decide. Unfortunately, if you are in prisoner into your own communities up there, I just read today that Maine's going to cut their budget by $10 billion. First thing I put on their website, I said, defund the universities. That's where us on the right, libertarians, say they want to defund the cops. We want to defund the universities. Universities are nothing but evil, man. Evil. No, I don't mean all areas. Don't be silly. I'm talking about the friggin', all of the silly social justice crap, the mobs mentality stuff. It's complete mob chaos there. Stop funding that crap for sure. It doesn't make any sense whatsoever to fund these people. They can get their money from the Gates Foundation, from George Soros, from the Frankfurt School acolytes that are out there, propagating Marxism everywhere. There's enough rich, wealthy leftists to fund these places. We don't need the taxpayers to do that for sure. But you're anti-education, Josh. Am I? There's only two genders, right? Just want to be clear. There's two genders. CNN is now calling a human without a cervix as they can't call her a woman. Just the whole thing's nuts. There's two genders. There's two. There's not three. It's not 52. There's two genders. And yet I'm anti-science. All right, let's keep going. All right, so this is huge right here. I've been saying this since I've been blue in the face. Economic growth and composition of gross domestic product is all consumption on you and I. Us ability to consume is where the growth comes from. Government spending, unfortunately, is way too big, way too big. But that will cut back. I mean, hell, they're talking about laying 20,000 workers in New York City. I just listened to yesterday. So the Clownio up there in New York, he doesn't have the cash. He's gonna have to lay off 20,000 people. Couldn't happen to a nicer guy. And yet, Killer Cuomo is up there saying, "Come back, rich people, come back." Well, rich people don't want to be killed. They're like, hell no, I want to take my money and go to freaking Connecticut or Florida. We're not have to pay any tax on it. Screw you, Killer Cuomo. And De Blasio saying, yeah, we don't want you here either. Well, good luck with your social justice when you got no tax paying base there, bud. But anyway, 67% of GDP comes from consumer spending. Remember, you control the GDP, you and that guy, old Pablo over there. We control the budget. We control the GDP. Thus, if you're getting rabble-roused or if you're getting threatened by little tyrants, take your freaking spending and leave. They will not be able to last without you, as what we're seeing in New York City right now. Get the hell out of Dodge, man. Don't freaking take that crap. Y'all can kiss my butt. All right, let's see. I thought I had one other thing. Oh, total assets in America. $127 trillion, mi amigos. That means my friends, for you all who can't speak Spanish like this guy. It's actually mis amigos, I think, right? 127 trill with a T. Total assets or liabilities, 16 trill. Homes represent 27% of overall net worth. Homes. Other financial assets, your 401k stocks and whatnot, 38%. That seemed a little bit odd to me, actually, because if I recall, I thought maybe it was the I can't remember, but the homes are the biggest asset for the vast majority of Americans. I think that's what it was. 27% of $127 trillion is in real estate or homes. So if I take my trusty BA2 plus Texas Instruments, I take 127 trillion. I don't know if I can get trillion on here. That's okay, I can't get it. So let's just do 127 and we're going to times that by 0.27%. That means $34 trillion is in people's homes and assets. $34 trillion, my friend. So we take 34 trillion as assets in people's houses, 34 trillion with a T. All right, still got some people on here. Good. I want to make sure I'm not yapping too much, but 16.6 trillion is our liabilities, of which 66% is mortgage. All right. 10, we have 34 trillion in assets and 11 trillion in liabilities, $23 trillion in equity in people's homes in the good old US of A. Why would you not consider using that in retirement? I don't understand why. Look, and if you make a case like my man Alberto, I always bring him up. He actually ran the numbers. He didn't think it was worth it. That's fine. That's fine. But don't just disregard reverse mortgages or downsizing using your equity somehow just because some guy on YouTube, myself included, said it's great or it sucks. Don't do that. You got $3 trillion in equity. Not to use that doesn't make sense, in my opinion. And you can see debt to service ratio down to 9.6%, amigos. 9.6% household debt to service ratio. Debt payments as percent of disposable income down to 9.6. And this is the second quarter of 2020. Now, some of that might be misleading because of fake unemployment benefits. But I mean, look, we can go back to 2012. It's low. It's low. That's positive stuff. Net worth seasonally adjusted, not seasonally adjusted. So we had 71 trillion in net worth in the third quarter of 2007 when the markets went kaput. And we basically, not doubled, but we're at 114 trillion now after when all is said and done, after we've had some significant sell-offs. Man. Now, this is a concern of mine. Spending as a share of income tax, you can see the top 10% of people save. They have 69% they consume of their income. 101% of income is spent after tax on the bottom 90%. That's a concern. That means now there's so many ways to skin this cat, but just keep that in mind. If you want a stimulus, this is literally why I didn't get a stimulus, because I made too much money, because people in my income we don't spend stimulus, we save it. Here, people spend it, which is inherently, if you want to stimulate the economy, you don't give a tax cut to everybody. You just give money. You literally put money in the hands of the people who are going to spend it, which is in this case the bottom 90%. And that's basic modern monetary theory in some regard. That's I don't think Friedman would argue against that, frankly, and say, look, if you want to stimulate the economy, you get a shot in the arm. You send $600 to a guy who's going to spend it, because spending is what stimulates the economy. People who spend are on the bottom 90% from an income perspective. Top 10% have 50% of the income share pre-tax, but see, that's what's stupid. Pre-tax, that's a misleading number. That's dumb, because 50% of the population pays no federal income tax. They pay FICA, I grant you, but they don't pay federal income tax. But not to use this and say, oh, pre-tax income, 50%. Oh, yeah, well, how about after tax? Pre-tax is nothing. As after tax, that's all that matters. An investment and income, by the way. All right. I don't think of anything else here. My connection is not stable. 50-year average of unemployment rate, 6.2%. Wage growth is 41%. So we're in a kind of scenario here where we had significant unemployment, well below the averages for basically 10 years. Then we jumped up because of the economy virus. Wage growth has averaged 4.1% a year. That's pretty good. Relative to inflation, that's actually quite good. I'd like to see that. You want to see wage growth. We want to make sure it goes to people who will spend it. And we want to make sure it goes to the 90% more so than the top 10 for sure. But wage growth, that's the issue here. Who is actually getting the wage growth? Is it the hedge fund managers or the guy digging ditches? That's a concern. Let's see what we got. I guess that's pretty much. Oh, I do want to point this out. This always cracks me up. All right, average earnings by highest degree held. All right, so a couple things. So if you have a bachelor's degree and that's your highest degree, your average earnings is $71,000 bucks. If you're a high school graduate, your average earnings is about half that. If you have an advanced degree, your average earnings is $100,000. What the problem with all this is average. Again, I told you the other day, a couple times, and even yesterday, we know people who are in nursing homes, wiping butts, changing diapers, who have psychology degrees. All right. They're making 12, 13 bucks an hour to change the butts of people with dementia. So you're going to throw the average in there. There's also, I mean, the averages, we're taking a bunch of people who have degrees who go on to make a ton of money for whatever capacity. And we have a bunch of people who have a degree who go on to make no money, but the zero is the bottom. It's an infinite up top. So when we're averaging, it always skews to the higher amount. So to say, oh, if you have a bachelor's degree, it's better off than being a high school graduate. If you're only looking at averages, it's just stupid. It's dumb. Now, if you have an advanced degree, it's dumb too, because doctors have advanced degrees. You name it, they have advanced degrees. But if you just taking bachelor's degrees, it's stupid, because again, the whole thing is dumb, because you're not separating the people who have degrees aren't making crap for money. You just average them in. You're taking the MD, you're taking whatever, the freaking, I don't know. The professor who has an advanced degree and also consults and makes freaking crazy money, and you're throwing him there with the professor or the psychology graduate who's making 15 bucks an hour changing diapers, and you're saying the average is this. All right, well, the high school graduate, the same thing. You have less people who are high school graduates are entrepreneurs making tons of money. A lot of people who are high school graduates don't do that much in terms of income stream. They just don't. That doesn't mean they're bad people. It doesn't mean anything. But at the end of the day, to say high school average graduate, this right here proves that college is beneficial, is just silly. And secondly, by the way, where do these people where are they living? High school graduates, they're probably populating the hinterland of all America. You know what I'm saying? Freaking, Akron, Ohio, where else would we be? San Marcos, Texas, where the bachelor's and advanced degrees are probably populating the more expensive cities, Boston, New York, and the Seattle, the liberal enclaves, which cost more to live and they get paid more. I can almost guarantee you they're not that many freaking high school graduates only who live in Brooklyn, New York, for instance. But I guarantee if you look at freaking Rangeley, Maine, there's very few college degrees there. And so the people who live in Rangeley, Maine, whatever it's called, make on average 10 bucks an hour. The people who live in Brooklyn make on average 30 bucks an hour. Put those two together. So not to focus on cost of living is silly. All right. So let's see what we got. So let's stop this. Lots of good stuff. I love the JP Morgan stuff. There's so much stuff. Oh, by the way, is the dollar declining? Here's a US dollar index right here. We're at 97.4. We are not declining. This is where we were 2007, 2011. We're way up relative to where we were just a few short years ago. The dollar's collapsing. Nope, ain't happening. Let me stop real quick, and I want to share something else with you, and then I want to show you something. We're gonna look at. Actually, let's go over here. Oops, what is that? Hold on just a second. Oops. I don't know what that is. All right, let's go to home. There we go. US dollar versus Canadian. All right, so let's look at this, would you? This will be fun. We're gonna go back here, crack how, share screen. We're gonna go to this guy, looking at DuckDuckGo. $1 in the US buys $1.34 in Canada, FYI. That is not indicative of a dollar in decline. That's just not. $1 in US buys $1.34 in Canada. So if you're looking at buying real estate, Canadian property, if you live in the US, is awful cheap right now. Let's look at the euro. Where's the euro? Right there. So $1 buys 85 cents in the euro, which is significantly higher than what it was not that long ago. A few years back, it was like $1 was buying, I don't know, like 69 cents of euros or something like that. So there's becoming closer between the dollar and the euro. Let's look at the British pound right there. $1 by 77. So you can see the British pound and the euro are both worth more than the US dollar, which is worth significantly more than the Canadian dollar. But at the end of the day, both the British pound and the euro were well more valuable relative to the US dollar just a few years ago. All right, stop. We'll let Pablo out. All right, there, big man. And we'll see what kind of questions or comments we have, and then we'll let you guys get on to your day. Seeing a lot of folks continue to move from Rhode Island and Maine to New Hampshire also. Right on, man, because New Hampshire, free state project. Free state project. Yeah, Ray, the JP Morgan stuff is fantastic. Dwayne says 8 VTV is the only thing up on my board as a 2 p.m. Right on. Dem run cities, stay away from. I tell you, the best thing you can do for your own prepping is to stay away from Democratic controlled cities. It's literally that simple. I mean, the people are nuts. You shouldn't be partisan. Man, people want to hear my take on things. They don't have to like it, but my take is, why would you ever move to a Democratic run city? You know how they're going to treat you. They're going to treat you like a second-class citizen and expect you to pay for that privilege of being treated like a second-class citizen. Reverse mortgages like timeshares. Bad apples have reverse mortgage. Bad reputation early on. Not purple. I don't know who. Not purple. I'm very skeptical. No understanding. Yeah. No. Look, I get it. You know, I don't have a timeshare, but I know. Who has it? I forgot. I've dealt with a number of people who enjoy their timeshares immensely. I've also dealt with people who don't like them because they can't sell them. But I mean, I think it's, you know, the situation dictates for you specifically. Reverse mortgages, though, if you got 24 trillion in assets, we're worried about this freaking retirement crisis. I don't know why you would not consider tapping into that. I don't. I mean, I say this all the time. You know, don't be freaking penny smart, pound stupid. Is that what it is? And last, I say this all the time. It's a cliche now. Is, you know, don't eat freaking, don't fly coach so your kids can fly first class. That doesn't make any sense. You already did enough for your kids. Enjoy your own retirement. States have no income taxes are the New York expats. Yeah. Well, good for other states that are benefiting from the exodus from New York City. Someone's getting those tax dollars as sales tax. Yeah. Rich people have flown the taxation nation of New York. Trump is playing China. China is racing to the moon, and president is countering. Space Force is all about thwarting the Chinese threat from commanding space. I'm not sure what Harry's saying. You have a Chinese friend. Oh, because Harry's last name is Chu. Harry, you're the one who always says we're all going to speak Mandarin. If everything reverts to the mean, why not just own the entire market and get the mean? Because I can't, Jacob. I cannot rationalize that to myself. I know I should. It's stupid. I should just buy the freaking market and be done with it. I just can't. I grew up on the idea of value of the factor model, low price to book ratio, low PE ratios, high dividend yields. I grew up on that, cut my teeth on that, and the 3-factor from French and Fama, now DFA fame. I cannot leave that behind. I can't. I see there and I say, I know at some point, until I die, probably, that I will be rewarded for my ineptitude and my stubbornness. But like, who was a Buffett said, the markets can be or maybe it's Keynes. The markets can be irrational longer than you can stay solvent. I think that's probably true, but I'm still making money in the value. I mean, it's not like I'm not making anything. I'm building my shares because of the dividends I get. It's just my own stubbornness, man. All right, let's see. Canadians deserve better. Yeah, you hear about Trudeau. What a freaking clown. It's like, if the left does anything, like Joe Biden says this racist remark, and everyone's like, that wasn't racist, that was a gaffe. It's completely racist, man. Completely racism. African Americans, I'm quoting Joe Biden YouTube algorithm. Latin Americans, unlike African Americans, have a diverse population, essentially. What the hell is that? It's completely racist. Yeah, Justin Trudeau, man, nuts. But it's even worse than Justin Trudeau. Did you watch that guy Viva Fry? Well, Ray, you watched Viva Fry. I couldn't believe when I was watching this guy about Trudeau. What a clown. Canadians just imposed tariffs on the U.S. What are the neocons doing to us? I don't think Trudeau's a neocon. You got Felix right on. Penny wise, pound foolish. Is that? Yeah. Oh yeah. Okay. Something like that. All right. Warren said, finally sat through an actual live stream. Right on, Warren. Carl said, if I had to do it again, I would forego a business degree and got a technical trade job, worked that 4 years instead of indoctrination. Yeah, I completely agree, man. Jill, darn, I thought you were on Subscribestar. I couldn't get in at this time. Doom this week, it seems. Yeah, I was, Jill. I did the Subscribestar thing, but I screwed that up. If you're still here, I did not want everybody to show up on this on the chat. I wanted it to be via YouTube, but I want to give people a link to click on. I did not realize that there's a way you can actually turn off everyone's phone or mics and their video. I did not know that, so I got to figure that one out. So Wednesday, Subscribestar on Wednesday, 7 o'clock. People are now recognizing they need to bring back wood shop and metal shop for trade type courses back to high school. Yeah, I hope so. But the problem is, who's going to teach them? I mean, that's the issue. I mean, do you really want to be a wood shop guy and go to these schools now that are populated by SJWs everywhere? I mean, do you want to be that guy in the LA County? I mean, you know, their demands are going back to school, nothing to do with kids, to fund the police. That's nuts. Yeah, my man, try and buy a place in Western Canada these days. Poor Canadians are having to get 40-year mortgages. Yikes. All right, cool, man. Yes, moved. Yeah, my man Dan's moved from Massachusetts to New Hampshire, Maine. Right on. Yeah, Pflugerville, if that's how you, I remember. And then Selena. Oh man, it's good stuff. All right, I know several guys from high school that did that. 1 or 2 rentals sending pretty. Yeah, I know, man. It's funny, Carl. I deal with people all the time that have just regular blue collar guys, nothing fancy. Got a couple rentals, not a huge amount of investment assets, and they're managing the rentals, and it's just living large. You know, when I say living large, they're not freaking lighting cigars, $100 bills, or pounding around with Obama and the Martha Vineyards. But you know, they got a decent life. It's what America used to be. You know, just like work hard, save some money, learn skills so you can, you know, take care of yourself. And and I do with people like that all the time. It's freaking awesome. It's awesome. Now that might be the exception, not the rule. I don't know, but in my world, it's the rule, not the exception. That's all there is to it. Richard says, send his second oldest to trade school instead of college. Why rack up 60K in debt? Shoot, brother. I got my oldest to get free tuition over at Georgia Tech, and we're going to rack up more than 60K in debt still because of room and board. Because in Atlanta, it costs $20,000 a year to live. The room and board's nuts. I tell you though, the Merchant Marine Academies, Maine Maritime Academy, they got one in Long Island, if memory serves. Long Island, New York. They got one in Massachusetts. I'm telling you, man, I'm trying to convince my kids to go to the Merchant Marines. Even my oldest, not my oldest, but Chloe said, man, just go to Merchant Marine Academy. Man, you'll be making bank. And man. It says you're still hosting a meeting in Spun, so I thought I couldn't get, and then finally saw you were on YouTube instead. Yeah, right on, Jill. I screwed that one up. I thought I turned that one off, but techophobe. I'm not even a technophobe. It's a user error. I don't want to blame anyone but myself. I thought I was going to try to be cute by emailing everybody, and just didn't. 250 again. SMU undergrad. Damn. Carl, I got VTV, I have a tiny portion of VBK, VDIGX, and VTI. VTI is what I'm adding every 2 weeks to in my M1 account, non-taxable brokerage account. So VTV is my largest holding by far. I have about 80% VTV, 10% VTI, 10%. No, that won't work. I probably, let's see, 80% maybe 75% VTV, 15% VDIG, 10%. Yeah, that makes sense. So I have a tiny bit in VBK. Yep. My man George said he's self-employed this year. Can I contribute to a SEP and a traditional at the same time? Absolutely. Yes, sir. You just got to make sure you run the numbers to see where you are. All right. But, with your Schedule C for the self-employed individual, that will give you an idea how much. Basically, what I do, George, I take your Schedule C profits times that by 20%, and that's what you can put in. So if you have Schedule C net profits of $100,000, you can get $20,000 into a SEP. Absolutely. Well, look, I'm not your tax advisor. Seek tax advice first. Don't just go off what I just said, but that's what my guidance has always been. Look, if you got Schedule C income as self-employed 1099, 20% of that, and then you can put that into your SEP for sure. Backdoor 401k to Roth, good idea or not? Yeah, sure, man. I did a video on backdoor 401ks, backdoor Roths. I think they're somewhat overblown, but yeah, absolutely, it's worth it to look at. Sure. All right, my friends, I guess I will get out of here, and appreciate y'all being here. Sorry for the confusion. I will. Felix says he's in Cali and the property tax is killing him. Aren't they getting ready to get rid of Proposition 13 too? Get out of Dodge, man. Get out of Dodge. But we'll see you guys. We'll see you Sunday night. Again, I was trying this as an experiment. I like the live stream, so expect to see more. I'm trying to get away. It's hard for me to say I want to do it at this time every single time, but it's fun to do. And I'm going to try to email everybody before I do them from now on. It's VINIX. I don't know anything about it, Jill. It sounds like a Vanguard fund. Yeah, but I got no problem with the American Water. Let's actually real quick. VINIX. VINIX. Institutional. Oh, yeah. No, man. Yeah. Institutional index fund. There you go. It's just a index fund, institutional shares. I'd buy that. What would you say is a real starting salary investment financial advisor was a realistic growth of income? Josh, California is doomed. I agree. Try the Zoom link. Yeah, we are. I'll do it again, Ray. I'll do it on Wednesday night just to see if we can't get that to work. It might track, Jill might track the Wilshire 5000. Either way, that's my preference. The real starting salary, when I started at Smith, it was Legg Mason Smith Barney, I had a starting salary of $54,000, and I got is 18 months of declining. So I lost, was it 2% of my salary each month or something like that? I can't remember, but I had 18 months of 54,000. It was the declining thread. I can't remember what it was exactly. And then after 6 months, I got 20% of commissions. So basically, I was making that. There's a 12-month period. I had a decent salary with 20% commissions. I actually made pretty good money. But then when I went off salary, I went into a market that just got killed. And my salary was gone, and my assets were gone because the market got killed. And so my salary was my commission run for 2007 was like $34,000, dude. So in 2005, I made 70,000, something like that. 2006, 60,000, and 2007, I made 34. Getting off salary is tough, dude. It is. And state exit tax, yeah. Oh my goodness. We had that in New Jersey. That what they did in New Jersey, Warren, is if you had a time to go to court, right on, man. If you had a real estate gain on your home in New Jersey and you sold it, there's some provisions in there. It wasn't, I can't remember what it was, but you had to pay some money on your gain on your house. I forgot what it was. I can't remember if we had to pay it. I think we did. I think it was a couple $1,000 too. I can't remember, but New Jersey was a state exit tax without question. And I just remember it had to do something with the gain on your home, and you had to pay a certain amount of that gain to the state of New Jersey, even if it wasn't taxed as capital gains to the federal government, because we didn't have $250,000 a gain. It was a don't let the door hit in your butt fee for sure. SCOTUS is going to be ruling on a lot of liberty killing legislation in California. I'm not holding my breath, man. Yeah. All right. See you guys. Thanks, everybody. We'll see you on Wednesday. Subscribe to our folks, and we'll see you on Sunday for everybody. Sunday at 7 o'clock Eastern time. See ya. Thanks, Al.